Good morning, traders. It is, or happy Friday. It's 8 a.m. Chicago time on Friday, the 1st of July, 2022. Let's start off today by getting a quick mic check. Um, I am working from home today as I get prepared to travel, see in-laws. Just a different setup, so a different microphone. Just let me know. Uh, Today's episode is number 2264. Is that correct? Seems low. Uh, it is 2,264. Thanks for joining me today. Derivatives trading is not suitable for all investors. Past performance is not necessarily indicative of future results. This morning on our convergent trading pre-market summary sheet, first thing to note is that this is a U.S. holiday weekend. We are heading into the 4th of July weekend, big weekend for Americans. Just the schools are out. We're full blown in the summer. Likely to see the action falling relatively early today. So after the first couple hours, traditionally we see a big drop off in the number of ticks per minute and the volume. So look for that. The overall risk posture is mixed. We were actually way off this morning. The markets were way off this morning. We took a pop higher on some European news. The release out of Micron Tech yesterday was just very, very poor. The outlook was poor. The street estimates are likely to miss in this earnings season, which is starting next week. Overall, Micron dragging down the Taiwan exchange index, which is very tech heavy or semiconductor heavy, and again, we're likely to see the street adjusting earnings going forward. We got warnings out of Target, Kohl's, Restoration Hardware. There are several major players that have announced that they're likely to miss their targets. So this is something that the market is already pricing in. This morning, the big number that came out was the Eurozone inflation rate year-on-year flash for June came in at 8.6 versus 8.3 expected, higher than the 8.1% from the prior month. Core inflation, however, came in a lot better, 3.7 versus 3.9, the prior 3.8. So we're seeing that cool off. The inflation rate month on month was 0.8, which is higher than 0.5. So that was at 5 a.m. Eastern, 4 a.m. Central, and we see a market popping on that release, popping higher on that release. We're looking for the S&P Global Manufacturing PMI final, which isn't really that effective. However, we do get ISM Manufacturing PMI, which is a high tier number, expecting 55 this morning. Crude is popping higher this morning. It's been in a rally since the European Open. It's pushed pretty good from about 105 to 108. And holding, so up 2.5% currently. However, we saw silver and copper take it in the teeth, really just taking a beating. Those two industrial, especially copper being an industrial metal, falling off pretty hard. The expectation here is that this is in sympathy with the semiconductors, which consume a lot of copper. So that's that. We're seeing a pop higher also in the treasuries. The 30-year bond is up over a handle, and the Eurobond has been quite the mover today. The Eurobond up 1.52 or 152 ticks or 1.01%. Pretty big move there in the Eurobond. looking at crypto has been steadily kind of chopping downwards. It's been holding 21, 22, now down at 19. Same with Ether, holding around 1200, now down at 1000. It is a little bit higher today, but really, really, it's just such a mixed bag right now. The S&P, just a quick run through the metrics here. Charts come later. The S&P is in a multi-distribution profile. We've basically built ourselves a double distribution in the overnight session. The S&P, 266,000 contracts traded, giving us a pretty high pre-opening volume, but within one standard deviation, or what we call normal. It is on the high side, but it's not. It didn't exceed the 290,000. The inventory, however, is 94% short. Essentially, the S&P opened, went down with the Micron release, popped higher to 93.75, and just fell right off in about 50 points to 37.44.50, and that's the low of the session. And now it has come back to almost break even. The S&P trading about 10 points lower. The range is 50 points, basically 49 and a quarter points, covered in the first hour or so of the reopen during the Asian hours, and we've been in that range all along. Currently, the let's look at that. Here it is. Currently, the S&P shows a double distribution profile. We've got the point of control shifting higher. We have the mid and VWAP on top of each other, close to the point of control. The market has tested down below into the 37.50 area, got down to 37.44.50, and has bounced back up to where? It has bounced back up to our magnet. What is our magnet? I've been saying this number so much. 37.55. 37.55. That's the magnet, and look at where we are, 37.81. If you've come to trading to expect perfection, like 37.81 versus 37.75, same thing in terms of the context of what the market has done. So it may seem that it's off, but it's not. It's not. We're not about precision or accuracy, for that matter. It's an auction. The delta is pretty flat this morning. Really, look at this. The very large lots. The tape this morning was pretty quiet until just a few. A half hour ago. We have a little bit of pop there, but the very large lots are very quiet, and then the large and the small lots have been offsetting each other, and now they've crossed. The large lots crossing the zero line, with the small lots falling below, and the delta basically flat on the session. So we'll see. It's really hard to predict what this is going to look like, but one thing we know as we look at what we have done, I forgot, I've been wanting to put this box up here. There's a box right up here. Boom. Okay. We've been basically, after we sold off, we consolidated on that awful trading day. What was that? Wednesday. And then yesterday, what we did is we came right back into this point of control from Wednesday. So if you squint your eyes a bit, you'll see there's a pink line in here, and that pink line is the point of control, and that was hit on the nose yesterday before we sold off. So yesterday we tested down. We took out the template day low, which was from the 23rd, around 45. I think the number was 45. We took that out by a handful of ticks. I think the low was 41 or or yeah, 41 and a quarter. We took out the low, and then we crossed the entire range all the way back to this point of control. So we traversed from the low of the template day all the way to the point of control of the prior day before selling off into the close and finishing in the middle. Yesterday left us with a multi-distribution profile, active price discovery throughout the range. And then what we're doing today is we're opening inside of yesterday, in the middle of yesterday. So you could see that the mid of yesterday right here is where the point of control is, with VWAP and mid underneath them. Okay, so you know it's we settled at 37.8950. Let me verify. Yes, 37.8950. That's accurate. And we're staying below settlement here. So we have not spent very much time above settlement. This is, remember the overnight inventory being what is it? 94%. Well, there's the 6%. This is the 6% that's above the settlement price or the close. Those are not always the same price, but they're pretty close. To me, this is skewing to the negative side, just like we expected yesterday. We expect the market to open, pop higher a little bit to balance inventory. Doesn't always do it, but very common. And then we saw sellers come back in, and yesterday, I walked through this during a webinar for Convergent Trading yesterday, but yesterday gave us some okay price action based or structure based setups, but overall it's let me tell you, over the last, I would say, week, it seems like participants have been preparing for the month end, and so to me, it has been trading very, very, very much like expiration week. And expiration week, there's a lot of movement, repositioning as the open interest moves from one contract to the next, or as outside options positions are hedged in futures. To me, the action has been that way. I'm sure you've been involved where you get on a short or a long, and it goes and gives you one or two scales, and the next thing you know, it's swept back to where it was, and it just stops. To me, this is just like very, very similar to the delta hedging, the common delta hedging that we see during expiration week, triple witching week, and so on. So this is likely. I'm guessing that this is likely. This likely has to do with the fact that yesterday we finished one of the worst performing stock markets. I think the Wall Street Journal said since the 1970s. Correct me if I'm wrong, anybody, but it's one of the worst first halves of the year since like the 1970s. It doesn't seem all that bad, right? But it is. It is, and so that impacts people and their positions, and how they are using futures to hedge the fact that they may be holding positions that have open risk. Remember, futures are a derivative for the purpose of hedging risk. This is why when you go to the CME site, the biggest theme on the site is risk hedging. Micros are supposed to be micro hedges, things like that. And we're trading them outright as a product because it's much more efficient, in my opinion. Again, futures trading is not suitable for all investors, but it is my favorite instrument for many, many reasons. So here we are. We've moved down. We have flagged. We have resolved. So this is a bear flag here. We have resolved down, and we seem to have had our continuation. So this is the impulse. This is the consolidation. This is, we'll call that a flag. This is a continuation, and it seems to want to correct or balance here. This is what it's setting up to do. We do have pretty good volume above us. Remember, the 38.25 is dominant here. We had 38.20 yesterday, which, by the way, set up a beautiful trade at the 20. It went to 21 on the higher. 23 was it? Yeah, 22.75. There was a really nice setup here into this 20 to 25 range yesterday before it fell off. There was a pretty decent collision at the high that rolled back down, and then it just let go from there. But we have this pretty decent magnet up above. We have this massive magnet down here at 37.75, and what we're doing is we are zigzagging between, if I pull in the history, which this time frame doesn't allow me to, and I don't want to change the time frame, but if I pull in the history, hang on, don't want to move this box. If I pull in the history, you'll see very quickly that the point of control, the pink line, goes to 37.75 or so. And what we have done is we have established a distribution at 38.25 and a distribution at 37.75. And what we're doing is we're teetering in between them, back and forth, back and forth. That's basically what's happening in the bigger picture. Let's look at it on the TPO chart. Again, pretty strong selling day Tuesday, complete just a garbage day on Wednesday, and then yesterday we gapped, pushed down, pushed back up, touched the point of control and the close or settlement of Wednesday, and then finished right on top of this 3,800 area. Let's see. So we finished at 37.89 and a quarter with the point of control beneath us here at 37.75. So what we've done is we've moved from up here to down here to the big one, and we are opening right in this area. So for me this morning, again, I'm sounding like a broken record, but for me this morning, I'm going to keep my hands off the mouse for about the first 10 minutes or so, and just let the market decide what it wants to do, which side is wanting to push, and then I'm going to trade knowing that any movement away from here is likely to revert back to the 37.75. I will trade from the inside out, meaning from somewhere in the middle away. No, but I have to pay very particular attention to the key areas below and above for reversals, and those reversals are likely to be pretty aggressive, which is what we have seen here recently. So if I go to the intraday, you'll see that once it makes a turn, it goes all the way. So here's a big push, and then it goes all the way. The retracements are like 68% or 75% or something, but they retrace back to the magnet, retrace back to the magnet. That's the most important thing I want to lay out for you today. I'm going to leave you with that. I don't really have heavy expectations this morning. I mean, there's not really all that much that I can offer here other than to say that it is Friday into a long weekend. Monday is off. It is a holiday. The exchange is closed. The futures are open till noon Central, 1 Eastern. I don't recommend that you trade them, although those thinner days tend to have some pretty poppy moves. And so, yeah, so just take it easy today. You don't want to go into the weekend with a big hole in your pocket. It does not. I've done it. Trust me, I've done it many, many times on heavy losses sometimes, tens of thousands of dollars, and it just carries into the weekend. And by the way, I'm divorced and remarried, and I did those in my prior marriage. That's how bad it can get. So learn from my mistakes, please. Don't repeat what I've done, and understand that today you'll want to commit a modest amount of risk for your setups. You'll want to pay the fee, the ante, the stop, in order to see if your trades work. But if you hit that risk limit, please walk away. Just shut it down. Go enjoy the weather. Go enjoy your family or whatever it is you like to do, instead of fighting on a day where it is very likely to go dead and sideways later in the session. Okay? Good luck today, and I'll catch you on Tuesday morning. Please be safe this weekend. Don't blow your fingers off. Enjoy your time. By the way, time away from trading is equally as important as time in front of the screen. You need to shut off. I'm going to be spending a lot of time with my little kids and so on, just to recharge. You need to come back feeling like you're ready to battle the markets again. We have excellent structure, by the way. We have just some really interesting structures to trade from. The auction has been pretty good. We have a lot of double tops and double bottoms and areas that are very obvious trade areas, good risk reward. So the trade is decent. Just make sure you have the money, or you retain or minimize the losses so you can keep trading. Good luck, and I'll catch you on Tuesday morning. Cheers.